Good evening, good evening. Welcome to our live Facebook at Martin T.F. Wong. This is indeed at the interesting moment as we going to pass the month of September very soon, which is almost already 9 months that we talk about, and I do hope that a lot of my live Facebook macroeconomics and stocks has turned favorable for you. It has turned favorable for me and some of my students and also user of SmartRobie, and I hope will be for you too if you have followed some of those advice. And it's always very unfortunate. Sometimes people just step out in the market and miss some of the big runs that we've seen so far, and of course many people continue to stay away from the stock market, and I hope that you are not one of those, but continue to look at the market for what it is and the opportunity that is driven by our Pentagon Guider. And tonight is not much of a difference. I'll be talking about the US interest rate cut, which we did see last week, which is actually a continuation from the same topic that I talked about on the 29th of July some time back, and we did talk about that the probability of interest rate cut is seemed to be very high, and indeed it did cut finally in the month of September, and we want to see going forward what are those rate cut. And we want also to take a look is, are we heading for a new boom or simply looking in a down market, as many pundits were saying that the US stock market is on a downtrend. We'll also be looking into the Malaysian market. Trade VSA, our co-founder here, we are the first Malaysian digital investment advisor license, still existing right now, and trying to make a difference for those of you who are using our SmartRobie apps, and I hope that you go out and tell your friends. We are also a finalist in the Investment Tech of the Year for 2025, and this was held recently. Pretty proud of our member here. This is Yi here, and definitely making good wave on the Trade VSA. Now, for those of you who are professional CPE, and if you need 10 points, we'll be doing effective AI tools and insight for enhancing decision making in trading investing using AI. That will be on the 29th of November. Just 4 hours. If you need those 10 points, you can definitely register in our website in here. Okay, Year of Snakes, which we started beginning of the year. Pretty much from the Chinese New Year, we did say that Year of Snakes, not that great year, right? Not like what we saw last year, the Year of Dragon, where we've seen 25% over return. I think for the US market currently is still around 10% for the S&P 500 market, and for KLSE is still, I believe, in the negative territory. As I said before, early on, beginning of the year, most will be minus 3% to minus 8% for our KLSE. Don't expect to be a positive return in here, judging from the interest rate that we've seen, as well as the foreign fund, which is still lackluster in coming back to the Malaysian in here. Alright, let's look at the FBM KLCI right now. As usual, I want to share with you what I think is likely to be. So let me just make this a bit smaller, and then we can get on to it. So usually with that, and for those of you who are our members using the Pentagon Guider, this is definitely a game changer that you will see in how now, like it or not, there were a green Pentagon on the 17th of September. Okay, and right now we can see there is a resistance here, right? Continue to make a headline here. This resistance is very tough to crack, which is at the 1615, and now retest back, or at least supported by 1600. So the likelihood is that this market is going to congest, and at one point I do hope that it break, but likelihood it will break above 1260 or 1625 and then reverse back this is why I think our market don't have the kind of capacity for it to move higher. That's unfortunately how I see it. I see for what it is. So that's why I'm going to be telling you where it is. Let me just figure out if I have a pencil here. No, I don't have a pencil here. It's kind of tough to draw here. Maybe I'll just use this. Yeah, can I? Yeah. So it might just go up here and then eventually come back down here. Right. This is what I talk about. Right. The market breaks out, come back down, goes up, and then come back down again on the seasonality of the year. So don't be too overly bullish should the market break down, but it is a different case altogether for the US market. Okay. Now on the US Nasdaq, which I'll look at it every session that we do here. So we look at NQ, and you can see the green pentagon is making good wave. The market did break higher only finally when we saw this market overtook the uptrust. Here's a nice double bottom in here. Market is trying to break up, and right now you see a 2-bar reversal, right? Usually denote a market pullback, and if the market hold, then you'll see another up move from here. US market continued to go headwind as the interest rate last week, they were talking about interest rate, and then the interest rate jumps up, the market started to move up, so that's very favorable too. All right. Next, we have the wicks. We measure the fear indicator. Wow, there's not much fear in the market. You could see right now it's below 20. Anything below 20 generally are very, very good. But once you go into the 14 and 15 below in here, that's where the market seems to be going up. But right now you could see the market jump back up, and if the market were to break back to the 15 mark, that meaning the fear factor, it's very, very muted. There's not much of a fear right now. It's just that people are just waiting for the market to go higher, then they want to do something about it, which is usually the okay, let me get the arrow here and delete this. Okay, so next we have the KLCI. All right, where do we go from the KLCI? So if you look at the KLCI, you log into our VSA 360. Let me just open this up, and you can see the KLCI. This is here where we are heading. So for the month of September, we are still in the positive month, 1.56 with another 6 more days. Maybe this time we will break through this record in here, and we have 2 months of positive. Okay, so if you look at the KLCI, which I share with you in here, it will be likely to break and then pull back. So which is still minus 2%. Only last year we made a positive 12.47 here. Okay, I hope you can see this. Minus 2%. Now, of course, if you have any comment, anything on the stocks, put it in the comment there. I'm happy to make. So likelihood the market will break up and then pull back. We should still close with a negative territory in here. Overall, returns hasn't been that great, as you can see from here. And we also want to look at the foreign funds. Okay, whether the foreign funds are back. Now let's take a look at this one here. So if we look at the foreign funds, you got couple when the market sort of have positive net flow. This is where you see positive net flow, market flow back in, and then right now it's still stabilized. You still have outflow, so markets is sort of holding it. So we have seen the rate cuts, pre-rate cuts. Foreign funds are flowing in, so would that be the trend going to forward? Because we still have another 2 more rate cuts. The next one will be a couple of slides I will talk from here. Okay, so where the foreign funds are coming from? Probably some incentive from the interest rate. Now, why the US rate cuts? I think this is a question marks. Recession, all right. You can see the job numbers which been coming out from the Trump administration has one of the worst in here. Food prices continue to go up. Inflations are pretty much in control, but a lot of people are unemployed right now because of the AI, a lot of cost cutting in here. So that is it. But keep in mind, the US economy is not a reflection of the stock market. All right, I'll repeat that again. The U.S. economy is not a reflection of the stock market. Now, one of the reasons why is because the stock market, in the context of the U.S., is always forward-looking, right? So it's forward-looking, and that's why you need to plot again the chart to see from here onwards. So one of the also likelihood reason is whenever the likelihood of a recession, the U.S. Federal Reserve tend to cut interest rate, and when you cut interest rate, the so-called futures value of a lot of the tech stocks short right now, and that's why we see the rally that we are seeing right now. So again, the US rate cut has been the result of the job numbers which is coming out being very slow and very soft in here. And if you go back to 29th of July, when I first talked about in here, is Donald Trump wanted an interest rate cut. You know that he is definitely one of the leader who try to muscle his influence as well. He's bullying everybody to submit to his demands, right? And the same thing going. So finally, in July, the U.S. Federal Reserve, Jerome Powell, wanted to cut rates, as also the numbers are feeling a bit softer, the figures, but inflation continued to stay in par or a bit higher in here. Now, why Trump don't want any higher interest impact? I think you get the idea in here, something I've talked about. He always been property man. If you look back into the 1990s, he developed a lot of the properties in New York. So being a player, he prefer low interest rate. And that kind of regime has stayed with him over the years in here. Now, if you look at Federal Reserve before 2020, S&P 500 tends to go up, whether the rate comes up or comes down. That's the overall perspective in here, right? And when low interest rate at just after the global financial crisis 2009, you could see when interest rates were very low, and that stimulated the S&P 500 to go higher and higher, and now it's around close to about 2,000 over in here. So that's always been the era. Now, if you look at the U.S. interest rate plus recession plus the U.S. dollar Malaysia, right? You can see right now we did have one cut, so there's still a lot of room for it to come. And the last round that you had, when you maintained this high interest rate, right, and there were a forecast, that was in 2008, the global financial crisis. When the recession came, they cut rates, right? Then 2016, they have a recession too, but that time interest rate was so low, so they may actually push it up in here. Then remember 2023, right? It's not so much a recession, but the Russian-Ukraine war caused the stock market to fail, and it all felt like a recession in here. But U.S. market was still growing, and they have to keep up the inflation. They have to raise the interest rate. But right now, there is no incentive to keep the rates high. That's why you can see the Donald Trump is trying to push the matter to have a lower interest rate, and there's a lot of room to fall. Now, in tandem, if the market were to fall, recession do come. So that is the kind of pattern we are looking for here, right? Now, on the 29th October, keep in mind, this is the 35 days from now, right? So they would be like, currently the interest rate is at 4 to 4.25. This is from the US Fed chair watch in here. So on the 29th October, again, similar to last week cut, a 94% rate cut of 25 basis point. Okay, 29th of October. Now, if you look at the trend before and after for the Dow Jones, if you look back, market tend to move up. And then on the interest rate cut a couple of days later, the market pull back, which what we are seeing. So the trend hasn't changed, but now we are likely to see the same trend also appearing. 1 month later, market is likely to go higher, maybe 3 or 4%. So if you look from here, let's look at Dow Jones. Dow Jones be YM1. Okay, this is where we are. I think last week, let me see, I can get interest rate. Just want to draw the interest rate. Okay, I think I got it just now. Yeah, Federal Reserve. There you can see, right, the interest rate cut. This is the 25 basis point. So he actually cut on, no, that's not the right date. I'm trying to get on US interest rate. I had that one. Okay, let me see, this is not right. So we go down to economics. So we put as a new panel. Okay, then you can see 4.25, right, somewhere around here. This was the rate cuts, all right. But it was actually last week. This rate cannot be, I think they backtracked a bit more. So this is where we saw that rate cut to 4.25 in here. So since then, the market has started to move up. Okay, let me just remove that first. So here, this is my point. My point is, so going back to here, you're looking at 3 or 4% cut from this point here. So market likely to go up another 4%. So let's draw our line here. 4 points. Let's say somewhere around here. I'm doing an estimation. So here, 4%. It should hit 48,000. Okay, in 1 month later from now. Okay, assuming the market can go higher from here onwards. Okay, so you can see also from our market stages, right, it is still below the red line, so there's still room for it to go. So every time when you hit that above red line, then we be careful. But right now, it can still go higher from here. This is about 3.5% from where we are. We can estimate it maybe somewhere around here, push it to 48,000. So we are estimating to go to 48,000. Okay, just let me just write that down. 48K at a 4% mark. That being the optimistic side. If it's a 2.5% in here, then we are looking somewhere just 47,000. So I just want to set you guys up how much the Dow Jones can actually move higher. Okay. And now the same goes for S&P. So S&P in December 2024, there was a 3% down. So if we take the S&P 500, same projection. Okay, S&P 500, ES1. So here we're looking at 4 to 5%. So this was the rate cuts. So we're going to use the base from here. That's 2%, somewhere around 3%. You're going to hit just short of 7,000. Now is 6,000. Yeah, short of 7,000, which means you've got another 3% more to go. Right? Just, yeah, 6,008 level. Okay, so 6,008 level. I'm going to write it down here. 6.8K. Okay, 6.8K. And for Nasdaq, we'll use same thing too. Nasdaq will be NQ. Market started to pull back, which is normal. You're talking about 5%. Wow, that's 1 month after that. Okay, so 1 month after that. So you're going to pull from here. 5% around here. We are talking about 25,600. Okay, 26,000, short of 26K. Okay, 26K, which is possible because the Nasdaq hasn't fully gone up yet. If what I mean by here, you can look at it. Right now, year-to-date entry is 16%. So another 5%, which is about 23%. Ngam lah. That's like the same as last year too. All right. So I want to set this perception that all of you are aware of. Now, if you look back on the next rate cut, currently is 4.25, 4.5. On the October 29, 94%. We get that one done first, and then you have another one in December, another rate cut, 78% in here. Okay, so which is good. 2 more rate cuts going forward that will so-called parlay into what the estimate I've talked about, the 5% up projection from here and the 5% up projection from then onwards. Okay, any question, let me know. We're just going to move on. Now, my forecast is S&P should close above 15%, right, by year end, because right now it's about 10% here, as I said before, 10%, so around 15%, ngam there lah, that level. But there might be a correction of 5%, somewhere in October, November. A correction of 5% is no big deal. If you look at the S&P 500, ES, from where we are right now, a 5% correction, which is this level here, that's going to go down right to this base here, right, 6,004. When you have that, you will see a lot of people going to buy. Okay, so that is the thing that we want to likely to see. So correction is possible in here. Okay, let's move on. So let's look at the NVIDIA stock test, TSM, which is all my favorite stocks. I think NVIDIA is ready to move up. Okay, based on the green pentagon, you can see green pentagon is here, pullback. Then we have TSM. Use the SmartRobie app. So TSM has done pretty well. Since the green pentagon, it's up a fair bit in here. Okay, green pentagon. So we look at here, done pretty well. High of 15%, very, very good. Okay, Amazon. Now, if you have any Malaysian stocks, let me know. Okay, Amazon, after the green pentagon, there was a breakdown from in here. Okay, because of the earnings date, I think it should be able to stabilize from here, 221. All right, and also there is some news about Amazon will need to be broken down. So that's the story here. Microsoft holding up that level too, green pentagon too, right, and no red pentagon yet, holding its level. Who knows, yeah, if the market correct, it will turn red pentagon. If it can go higher, that's where we are. All right, there's no certainty in the business there. Now, some of the Rakuten, now remember Rakuten is using our SmartRobie call, and some of the great trades were SOXX. Let's take a look at them, right, which we've seen here. SOXX. Alright, that one, green pentagon, which is still up. LRCX. Okay, this one is Lam Research, has done pretty well from green pentagon here to up. So let's take a look where we were at the green pentagon to here. That's almost 24%. Nice one, the $129 in here. Okay, then ES or MU is even better. Let me just show you all the tech stocks. Same one from green pentagon here, right? MU has done, Micron has done up to 34% return. Okay, not to be outdone. For our Malaysian pentagon, you can do the same thing. So I'm going to show you very quickly. So you log into our VSA 360, and what you want to do is you allow at least 2 weeks. A lot of trades through our back testing, right? Usually when you allow the trade to run for 2 weeks to 3 weeks, the result is so much better. So this one in here, we go back to 2 weeks, which is today is 24th. We go back to the 10th. Okay, 2 weeks ago, and then you click submit, right? And what you want to do also, we want to make sure the price, you can see here the win rate is only 71%. Okay, but when you put in 29 cents, okay, that automatically make the win rate to 84%. A lot of trades we are putting, and then we put also our indicator -5 and -0.5 to ensure that the so-called buying at stage 2, and that's how we get some of these stocks like IHA Healthcare from the 10th of September to now is 3.6%, Axiata 0.38%, Northeast, okay, made 17% return, Optimax 13% return, Cycom only one negative, 5 and 6% return. And similarly on the 9th of September also same, right? You can see, make sure you choose the 29 cents, okay, members, use the 29 cents. So going forward, if you're trading now, use the same filter and project it onwards, because as I said before, the KLSE, if you do break out, right, it's going to break out and then turn back down, so a lot of shares going to move, and you don't want to be running until year end. Get the trade and then exit from here onwards. Okay. 1.7 Powerwell, Persona, and construction and property, which is the stocks that you have. So one of the ways you want to do that is also check out the sector screener, which I've always talked about here. Okay, so you can go on to your sector screener and you can see a lot of them are green pentagon. So meaning KLCI is turning bullish. So it should hold at 1600. There's no doubt about it, right? Then breaking higher, you can see construction just turned green pentagon. So that's pretty good too. So which means these are all the indicators that you need to support any of the trades that is going higher from here onwards. If you don't understand, put into a comment and then I will help you to do that. But that's how you want to use the Pentagon Guider screener in here. If you're on SmartRobie, then you follow the SmartRobie. Alright? I think I've done all of it. I believe I have some trades from here onwards. Let me just get down to those trades. Okay, so I think that's thing we have in here. All right, some of the good trades that occurred. Let me just share with you. I have in front of me here, which I haven't put in. I think it's SmartRobie here is PI. Okay, FPI and FPI and Notion VTech. Okay, FPI and Notion VTech. Those are the two very big winner. Okay. So FPI and Notion VTech. So we can bring out the here and look at FPI. So FPI is the speaker maker in Malaysia. Okay, so the market were down from here, green pentagon, and then it went up, did a 2-bar reversal. This is bottom fishing. You can see at 30%, 25, we got up to 30%. So once you get 30%, you need to take profit today. Don't hang around some more. Okay, Notion was the green pentagon trade. Here's another one, green pentagon picks up nicely. Not all trade works. As I said before, the market is looking to correct back to the 1600 O levels. That's a 23% return. Now, if you have any stocks that you pick up for the green pentagon, all right, let me know. Put in the comment there. I'm happy to see you. But I'm just showing you all the trades that done very well on the Pentagon Guide. Now, SmartRobie breakfast show 10:15 every morning. We'll do a live session how to pick that. You can follow me too. Right. Bring some great understanding. Right. Market stages, which I'll talk about every week. So where is the market stages? Like just now, like FBI is in stage 1 accumulation, ready to move up to stage 2, and that's why we see the big movement. But once they've taken profit, the market's going to pull back a bit and then head on another level. It doesn't follow up this method all the time, but if you do it consistently, then it should be meaningful to your side. All right, now any stocks that you want me to look at, feel free to pencil it into the level. I'm happy to read. Now this is the audience choice, right? If not, we're going to stop over here. And thank you for your time. Don't forget Pentagon Guider, right, which is powering our SmartRobie going forward. This is the one that's going to make you wealthy, all right, for the US stocks, right? Listen to the SmartRobie digital advice. It will be helpful. Or if not, you can join our VSA 360 premium membership with one more guidance in here, all right? So join our Telegram chat room, right, for more stock information. And for those of you who want a 10-point CPE and part of the SIDC, accredited 10-point CPE will be on the 29th of November, right? 10 to 2:15, just a 4-hour course on using AI to enhance your trading and decision making. Interesting course. All right, so that's all I have for tonight. Thank you for coming. And as ever, put in the stocks that you want me to comment. If not, I'll see you on Monday. Thank you for coming tonight.